Today I'm going to show you some ways of investing to reduce your taxes in retirement. So, I know all the images that you see about retirement, the very attractive older couple holding hands on the beach. I mean, who does this? Let's get real. Retirement means more than just lollygagging around. There are some responsibilities associated with it. For example, taxes are one of the biggest expenses retirees face. But investing wisely can help to maximize your after-tax return and minimize that bill to the government. Now, this is stuff I know that some of you don't want to think about, but if you could really see some tax savings in retirement, isn't it worth thinking about it a little bit? The choice of your investments plays a big role in tax efficiency. Now, equity index funds and ETFs are generally more tax efficient because of lower turnover, which minimizes capital gains distribution. So let me quickly explain what that means, okay? It sounds maybe a little more complex than it really is. You may already own an index ETF. Very common one is SPY. This one tracks the S&P 500. A lot of people own this one, right? Now, because it just tracks the index, there's not a lot of buying and selling to trigger capital gains. So it's a very effective way of mitigating taxes. On the other hand, be careful of investments that generate more taxable income. Some examples are bonds and dividend-paying stocks. Now, not to say you shouldn't own these. Most people should. But holding these in tax-advantaged accounts like an IRA can offer some protection against immediate taxation. And on the flip side, consider putting tax-efficient investments like growth-oriented stocks or ETFs in taxable accounts. And the thinking here is those investments don't kick off dividends as much anyway, or interest payments, so they may be better placed in a taxable account. Now, although you'll still face capital gains when you sell, you can't get away from it entirely. There are some ways of mitigating this. So right now, we're going to take a look at some of these tax-efficient ETFs to consider for a retirement portfolio. The iShares S&P 500 ETF, very similar to the SPY. Advantage here, it's got a bit of a lower expense ratio, which is not a bad thing. The Vanguard Total Stock Market ETF, ticker VTI. This one gives you exposure to a broader slice of the U.S. equity market, so it includes small caps, mid caps, in addition to the big stocks in the S&P 500. Now, that multi-cap exposure hasn't helped this fund outperform lately, though, because the usual batch of mega caps have dominated Microsoft, Nvidia, Alphabet, Amazon. You know that story. So these indexes are seeing similar returns right now, the three that I just showed you. But remember the point here. We are looking at the tax ramifications today, not so much the performance. And just a reminder that taxes are a very important piece of managing retirement income. I really can't make that point enough. All right. Here is another tax-efficient index ETF. This is the Schwab U.S. Broad Market ETF, and this one tracks a broad index of U.S. stocks, about 2,500 totally, the Dow Jones U.S. Broad Stock Market Index. But here again, you've got those same big tech names dominating because they're just so huge. They've run up so much in the last few years. Okay, here's one more. This one is a mutual fund, not an ETF, but like for 99.99% of long-term investors, the difference in many cases is negligible. The Vanguard Tax Managed Capital Appreciation Fund, designed for tax-sensitive investors, and the approach is pretty interesting. Its benchmark is the Russell 1000 index, but it buys stocks that pay lower dividends. So a lot of those tend to be mid-cap stocks. That can add some volatility. But for investors in a higher tax bracket who have a time horizon of about 5 years or more and some risk tolerance for that volatility, this could be a viable way to minimize taxes. Okay. Using these ETFs in your investment strategy can boost your tax efficiency while you are also contributing to a well-diversified retirement portfolio. Hey, please don't forget to like and subscribe, and below you will find the link to get my free report on ETFs for a diversified portfolio. Thank you for watching.